Salvatore, someone I respect and I follow on Twitter, who is known to make excellent calls, stated that the melt up is about to happen, and they just bought 300 calls QQQ June 1. Not sure what that means. Okay, so it means you built the 300 strike for June 1st expiration on QQQ. That's what he's referring to. I don't think he means shares. I think he means the 300 strike on QQQ. So now that's funny. We'll see who has more fun here, Salvatore. Let's look at the position first before I get ahead of myself. Remember, when QQQ was at 301 last week, that's when Edison asked, would I buy shares of stock? And we saw in the portfolio, it's down to 288 right now. Okay. So 300 calls, June 1st expiration, slightly out of the money, price between 228 and 234. Yes, this is the close, and we can't get filled in this position. I don't know the contract size. He hasn't said that, but bought 300C QQQ June 1. June 1st expiration, 300 strike calls, somewhere in that line of 230. Okay, 231. That's what he did. He bought calls on QQQ for June 1st expiration at the 300 strike. What is he looking to do here? This is an out-of-the-money call. This whole premium that he paid is time value. There's no intrinsic value. It's all extrinsic and all time premium. Again, as we did before, what could we expect with this position if our expectations aren't met? Let's just go to the Black-Scholes calculator, and we can see the time decay curve. On Monday, the 23rd, right? Yeah, Monday the 23rd, we'd lose about 20 cents, about 10% here with a time value decay, and then we're going to keep seeing it decline and decline and decline. That's assuming the stock's not moving. What he is hoping for, this out-of-the-money call purchase, is he paid a small premium of 231, and he's hoping if the the ETF recovers a little bit. Last week is at 301. We lost 13 points this week on QQQ. That was on the Edison portfolio we saw with those three positions, Salvatore. So even if the stock comes back half of that 13 points next week, I'm not saying it is. I'm not saying I have the same sentiment that he does. The melt up started. Remember, we talked about the melt up last January. That's what we were seeing. We started this pattern. We were going up for 5, 6, 7, 8 days in a row. And then we had a sudden drop of maybe 1.5%. Then we were going up 0.3, 0.4%, 0.5%, 7 or 8 days in a row, and then a small pullback of 1%. And we did that for a long period, almost 3.5 months, I think. So the melt up means he expects a gradual increase on this position. Why am I going back here? Let me show you real quick. May 13th. I want to make sure I got my numbers right. Yeah, 1326. That's what we saw the decline if we would have bought shares of QQQ last Friday at the close. I know we couldn't, but if we did, it was at 301.94. We would have been down 13 points. So my assumption is the person you follow on Twitter expects there to be some relatively calming and strong news in the tech next week, and he's expecting this position to maybe gain back half of that maybe by the end of next week. Why do I say that? Because otherwise he wouldn't have selected a June 1 expiration. It's really close. But let's say we go back to 295 by next week, by June 3rd. What would he expect to see? Oh, June 1st. Did I pick? Oh, I picked June 1st. I'm sorry. Yeah, so next week, 527. I'm sorry. Sorry about that, Salvatore. I got that all messed up. Here's the risk with this. Even if by next Friday it gains half of what it lost back, $7, and goes up to $295, the expected decay for the time value that he's losing with only 7 days left to expiration, actually it's less than that, is still a loss. So he's probably assuming that this might be back up to 300 sometime in the middle of next week, let's say the 25th, and he could see a high expected profit on that position. But again, if it doesn't hit his targets, and it only goes up half of what we lost in the last week. Oh, shoot. It only goes up half of what we lost in the last week. Excuse me. I'm sorry, towards the 27th with more time decay. We might still be looking at a loss on the position. Okay, that's what he was referring to, Salvatore. Now, I lied. I didn't lie. I did in a sense. I saw something today, and I saw something this week that really started to make me think, and I said, you know what? I've been good. I've been a good boy recently. I've been doing my married puts and my standard collars. I've been protected. I've been making some profits, taking some premium off AIG. Got to close out the ESI position today, even though it's down at $19 and I'm holding the 30 put. I've got a guaranteed 1% profit on that ESI position. Seeing the numbers that were coming out on retail this week, we saw Ross Stores down 26%. Target was down 23%, maybe a little bit more. I bought out of the money puts on XRT today, and I bought them at $2. They're at a loss right now. This was as high as $2.95 today. I bought them this morning at $2. I put in a sell to close order at $3.05 and it didn't hit it. It would have been a 50% profit. I was going to sell half, for a 50% profit, and I didn't get it. But next week, there are more positions coming out. Abercrombie and Finch is reporting next week, I believe, and a couple of others. Foot Locker reported good, but everyone else has been negative. What was my high today? Yeah, current session high was $2.98. If I had not been greedy and put in a close at $2.95, I would have gotten filled, would have made 43% on the first two contracts and kept the other two for next week, but I missed it, and I'm at a loss right now. So I got to be honest with you guys. I say I always am. I did lie to you. I didn't open this as a married put. Your friend says he's expecting a melt up, the person you admire, I should say, or you follow and respect, bought the calls on QQQ because he's expecting a melt up. I'm actually taking a bearish position on retail with XRT right now. Small portion of my portfolio, $800 into 4 contracts on this position. And yeah, I had a 43% return during the day, and I didn't close it because I was greedy. I wanted 50%, 51%, and it didn't hit during that big pullback, right from 11 till, 2 o'clock, that big drawdown that we were seeing. But anyway, I did this for next week because let's go back to the earnings real quick and check on that. Earnings coming up. Oh, yeah, there's Ross Stores was down 22%. Oh, Burlington Coat was down too. That was another one that sort of triggered that the retailers are reporting poor, even though the Foot Locker was a stronger one today. It was up 5%, ended up 4%. Geez. I hate when I do that. Oh, there it is. It's right in front of me. I don't have this one set up the same way as I do my actual trading account. This is the webinar account, so I sometimes miss it. Yeah, AutoZone, that doesn't really count. There it is. 524 is Abercrombie. Best Buy, 524. Nordstrom, 524. So that's why I have that small position in the puts there going into next week. Express, 525. Might hold on that long to go through that one. Oh, Burlington didn't have earnings today. They're just down 15% in sympathy. Oof. So maybe I will hold on to the 26th. In any case, just being honest with you guys, that's what I did. When I said last week, the only thing I'm opening now is a married put position. I took a flyer that represents, less than 1% of my total portfolio on a few contracts of the XRT, buying puts on the retail ETF, as we saw. And yeah, it's 61.33. That's where it opened today, but it was as low as 59.26, and I thought it was going to go into 58 range, and that would have triggered my sell on the half contracts. So with these earnings that have been coming out, I'm really speculative on this. And if XRT is the retail, if I'm wrong, and your buddy's right, Salvatore, we'll of course find out next week if there is a melt up, and that brings the retail up even before those earnings start coming out, those bigger ones on Abercrombie and everything, the 24th, 25th, and 26th. I might convert this to a bear put debit spread or something along those lines, or a bull put credit spread to try to turn a profit on it. And most likely, I'm just going to hold on to these long puts, and if it hits a trigger to close, then I'm going to close it. And if it doesn't, then, hey, I'm just going to regret that I was greedy and set my stop a little bit too high. But that's normally what I do, is I try to target a 50% profit on these shorter term trades. Sorry, I didn't show that. Mine is out to June expiration, June 17th. It's not the next week, May 27th, even though that's when some of the earnings are coming out. It's not the June 1st. I went all the way to the standard expiration to give myself more time in case there's surprise retail announcements next week and the stock moves up. Maybe I can cross a couple more where it might pull it back down. And not one of those ones that says I hate to bet against the economy, but so many of those stores, Target, Ross, and everything, have been reporting poor earnings, 15, 20, 25% drops, 15% drop in Burlington today. Looks like sympathy drop with Ross stores planning on the earnings that are coming out next week. So taking a little flyer here. So just wanted to be honest with everyone, because I said last week and I said earlier in this presentation, the only thing I'm opening now is as a married put, but I laughed when I said that to Jerry because I knew I was going to have to bring this up. The UVXY hedge, though, is doing good for that position. But just wanted to remind everyone, of course, as always, that today's material are my thoughts on your questions designed for educational purposes, increasing investing performance, and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or direct trading suggestions. Options do involve risk and may not be suitable for all investors. I have accepted on what we just reviewed there, but I have accepted that I can lose that full 4 contracts at $2 per contract of the XRT. If I'm wrong next week and the stocks, the retails come in strong and XRT goes up to $65, $66, my 58 puts are probably going to go to 10 cents or 20 cents. Proper position sizing. I'm okay with losing that because it was profits from other trades, and I'm taking a flyer on something I could have had a profit today on, but I got too greedy. So lessons learned from me. Don't do what I do. Proper position sizing, activate your trading plan. Now, today we've covered a lot of tools. We went briefly into the search tool. We showed the portfolio tool, profit and loss tool in the beginning, how to evaluate what your trade might be worth if the stock prices change to different levels in different areas. And of course, we looked at the Black-Scholes pricing model, looked at the portfolio tools, and the rollouts, most important. If you like the tools you saw today, remember you can take a trial at any time. Just go to PowerOptions.com, put in your name and email address, no credit card required. You have full access to those tools for 14 days. Of course, no credit card required as well. After that, the subscriptions start at just $45 per month for the end-of-day data. The delayed data service, 12 to 15 minutes delayed, is only $65 per month. You can cancel at any time. There's no contractual obligation. Trial members and subscribers get advantage, of course, of the free coaching, which is essentially a 35 to 45-minute phone conversation with myself or Ernie. You can upgrade at any time, and you have full access to the webinar archives as well as a full subscriber. Speaking of the archives, of course, the free education at any time. For Henry, we mentioned the covered call playlist over on YouTube. There's other strategy playlists there you're going to want to check out if you're just getting started out in a strategy. And you can also go over to the Power Options webinar archive page as well. There's categories there on using the Power Options tools, option strategy discussions, options concepts, and requested topics where our recent full Friday afternoon presentations are available. Now, if you do think of any other questions, remember, send us an email at any time to support@powerop.com or support@radioactivetrading.com. You can also call us during market hours at 302-992-7971. And of course, remember, trial members and subscribers can schedule a session at any time.